Bear with me. So let me try and get this. Share your screen over here. Righty ho. Right, I take it you can see my screen, everyone. Okay, great. Right, so we're just going to kick off then with the data that's come out. Um, it was the first reading below 4% in a couple of years. A fair bit below the revised 4.3 from the prior, talking about the Fed's preferred inflation measure, PCE. So that has put a negative spin onto the dollar that was already suffering, technically below, where are we? Below that trend. So yesterday was the first day in a number of days that it closed in the red. So first red day, FRD. And that's our cue. It's a signal day to be looking to sell rallies. All right. So we're below, this is the Dixie I'm talking about. So we're below that trend. And if we pop up above it, I'm looking to sell. And I'm looking to sell while below it. That was the closing price up here. So we've come quite a bit down on the day so far. And long may that continue for the rest of the day. We are back in now below last week's range. So last week's range was between this dotted line and that dotted line. If anyone follows the way I analyze markets, you'll likely be understanding my weekly template chart. So this orange line is tracking last week's range. So we're back into that range. And as I've been trying to drill in, markets do a number of things. They do three things, and one of which they break out, they pull back. So we've broken out of that range, we've pulled back into it, and we're looking for it to potentially fail. Okay, so let me get rid of the daily ATR. It's getting in the way of everything. La 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 la. Where are you? I'm not going to be able to see it. That's a pain in the ass. 1 minute. So if you've got too many indicators, what I'd like is someone, a clever bod, to program all of this data into one indicator, so I don't have to have all of these indicators up. But I can't seem to access an additional two indicators, so I can't get rid of that damn ATR thing for the moment. So for the sake of time, we'll just crack on. But what we're looking for is for this breakout to have been a failed breakout and come back inside and close below last week's range. And guess what? That will then, as we've discussed way back, if you've been following these meetings for some time, that will be eating into that weekly rally that we've been looking for. So we've been on the lookout, despite the hawkish Fed, something we talked about after the Fed. Despite the hawkish Fed, we were looking for prospects of a pullback into this weekly range. So anyway, that's a thesis that is starting to come alive, given that we've broken out of the last week's range. Last week's range's highs. We broke out and we are failing. We're moving back in. Well, I'm not saying we're failing because markets break out, they pull back, and then they either fail or they continue. But I'm starting to build a thesis that perhaps we're going to fail because of the weekly range. Anyway, so that's besides the point of today. I'm looking to sell rallies because of yesterday's break out of the um, bullish trend. So that gives us a bullish outlook for stocks which have already taken off, right? So stocks have already taken off. I was looking at this S&P, but at the moment, my rule is not to trade before the Wall Street Open. So I'm looking for a dump and pump. So we've got the rally indicating to me that we're on the up. So that was the W formation. We pulled back in on the inside of it. We're above yesterday's close. We are breaking uh, back into last week's range. So on the opposite, we broke out of last week's range. Markets do one of two things. They break out, pull back, and they might continue, or they fail. So we're looking for this breakout to be a failed breakout, and we're targeting last month's lows. Okay, up here, that red line. The ATR on the S&P index here is about 490 points. So far on the day, we've done a fair chunk of it, 400 or so. 40, no, 40, 45. Ah, dear. Okay, so there's still prospects of a move up into slightly over. There's still prospects of a move up into last month's lows. So what I'm looking for is a drop here. I'm fortunate that that news came out ahead of the Wall Street Open, considering my rule is not to trade until the Wall Street Open, but there we are. So maybe we're going to get a drop and we can ride it up. Same with the NAS, same with the US 30. Gold, so I'm just going to read what your comment is here, JR. Gold has pumped into today's highs. Yep. Okay. Rejected off it too. Okay, so pump up, rejected. We've had the pump up again. I'm not involved, but similar scenario before the open that we saw yesterday. Okay. Well, with gold, I've got it as a day 3. Right. Okay. So let's look at the what's happened on the week. On the week itself, we've got the opening range on Monday. Right. On Monday, that's the opening range. Friday's closing price is all the way up here, around about 1925 ish. So we've dropped once, twice, 3 consecutive days out of that opening range. 1, 2, 3. The thesis is we're going up. We've got 3 days of breakouts of the range. We're out of balance. So we're looking to rebalance at the end of the week, end of the month, end of the quarter. And we're looking for a move up in gold. So we've got the drop, and now we're looking for the pump up. So far, it's an inside day, but I think that's a little bit irrelevant at the moment. We're above yesterday's close. We're breaking structure. Having said that, we're not breaking hourly structure yet. So we're still technically on the front side of the bearish trend, but on a lower time frame. Let's have a look where we are. Well, we are still technically on the front side of the bearish trend. So, how are we going to play that? I want to be a buyer. I don't want to get caught out either. Right, so what I'm going to do is I'm going to get rid of all these markings. And we're just going to be cautious with gold. And mark out the structure. So for me, until we break this level right there, going down, up, oh, it's got to be there. Now that might look different on a different broker, but 18, call it 1880, is the line in the sand for the price to, it needs to break that to be on the backside of the bearish trend. Okay, so that is the bearish trend. That was the last swing high. This was the lower high, and this was the low. So essentially, until we break that structure, we're still on the front side of the bearish trend. Okay, so which is unfortunate because it's going to have to do a fair bit of movement before we can start looking for buys. Well, anyway, as per my rules. Okay, so maybe we need to attack that on Monday instead. So there's always another day. So, you want to trade the best trade setups that you can because there's nothing to say that you'll go long here and you'll find resistance and you'll be underwater very quickly. But you'll get a cleaner trade on the other side of that bearish trend. Okay. Right, so we're half an hour away from the Wall Street Open. Someone was looking at CAD. So the Canadian dollar and JR and I absolutely are at odds with this Canadian dollar. I personally took a loss. You see, you can be a tremendously good analyst, but sometimes you can get it wrong when you're trading it, and you can still be right in analysis and still lose money trading. That's just the way it goes. So unfortunately, I lost money on this Canadian dollar, a fair bit of it as well. Very frustrating. But anyway, brush yourself off. So the thesis was to the downside, and that's what we've got. So we've broken out of structure. Let's take this back to the weekly chart. So the weekly chart here, we've got W formation. Very nice. Okay. Uh, so W formation, and we've got a pullback towards the 50% mean reversion that lines up with this wick. So that could act as support and it could be a target area for us. Now we've already come into there, but this wick represents a pullback which we're trying to sell back into. I don't know if that makes sense. So the wick on a lower time frame is the market coming back up. So it's come down, it's come back up, and now we're looking to short back into that wick, into that wick's high over there, and that wick's low over here. I don't know if you can see that on the charts. Um, now, if we come to the daily chart, we can see this consolidated range here. I was trying to sell it. I can't remember. Was it on Tuesday? I believe it was. I was trying to sell the breakout, and I got stuffed on it over here. I think it was. Anyway, and then it broke out, breaking structure. I was perhaps too keen. So it broke the structure over here. Broke the structure and was very choppy on Thursday. Now, this created a range. So I'll just, from the high and low of that range. What I've done is I've basically just stuck a measuring tool on the high of the range. You can get that. And the low of the range down here. And I've projected 3 times that range's box. So let's do that properly. So on this measuring tool, you've got one full range expansion and then 2 full range expansions all the way down here. Okay, and that marries up with the 50% mean reversion of that bullish impulse that we saw on the weekly chart, and pretty much aligns with the wick as well that we're targeting. So that is a targeted area. This in here is a targeted area for the downside. Okay. Some weird voice like the session got hijacked by someone else. Yeah, I've got a squawk, and perhaps that was the voice that you heard. But I paused and continued after it. So anyway, so that is prospects for the Canadian dollar to the downside. It's currently tearing to the upside for whatever reason. Um, so it's starting to invalidate the move to the downside for the day, but let's see if the resistance doesn't hold, and perhaps it's the pump up before the dump in Wall Street. Okay, so keeping an eye on this. Let's have a look at what the dollar's doing. It seems to be coming up into shorts. So again, like I said, looking to sell rallies. So perhaps we're pumping before the Wall Street dump. Okay. I've also got oil on the radar. It was a first red day. So it looks like we're taking off now to the downside. So we closed lower yesterday. So just like the dollar, I'm looking for a short sell rallies. So we're pumping up and perhaps we're coming down in line with yesterday's sell-off. So impulse, correction, downside continuation in oil. Dollar yen, first red day, looking to sell rallies. So pumped up all week. First red day, inside day on Thursday. We came up into stops and dropped hard. We've pumped up, so now looking for the drop in line with a sell-off in the US dollar. pump and dump. P and D, pump and dump. Pump, 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 dump, dump, dump. Right, what else can we look at? The Australian dollar looking for a rally. Yesterday was the first green day in a series of red days. So we've already had a very strong rally. So the continuation happened on the back of yesterday's first green day, above yesterday's closing price. Very strong rally. Tricky one to buy when you're at the high of the week already. So probably not the best trade setup candidate. You're looking to buy low. The euro, on the other hand, is a little bit mid-range, so it's a bit better looking than the Aussie because the Aussie seems to be very high up. It's not to say that it's not going to rally, but I'd just rather be in something at a better value for my money. And the euro's giving us prospects of that. So it's done. So that we're looking for the pump from the trend line support. It's in the middle of the range. So what we're looking for is a bit more of a dump into the Wall Street Open for the pump. So a dump in the middle of the range is the recipe for an upside continuation. So we can look at that on the 5-minute chart. Yeah, very choppy. Nonetheless, we've got potentially a peak formation low. We're dumping into that low, and perhaps we're going to shoot higher. Cable, same sort of scenario. Same scenario in cable. It's almost a mirror image of the euro in terms of the structure. And I think that brings us to about it. So any questions, guys? Otherwise, I'm going to close this down and we'll start getting razor focused on looking for the best trade setup candidate for the open. Just to keep in mind, we've also got Michigan consumer sentiment that comes out half an hour after the open. And it can often be a mover. I mean, on our calendar, it's not really highlighted as a red calendar event, but in my mind, it is. So just be aware of that. Yeah, sure. We've just gone through the euro. It is on the watch list. It's pumped up, pumped down, dumps down. So taking the stairs, escalator down for the move up, perhaps. Right, I'm going to go make a quick coffee, chug a load of water, and roll up my sleeves. So we'll leave it there, guys. Thank you very much for attending. Appreciate you all. And we'll see you on the other side of Wall Street opening.